Good morning everyone and welcome to Moneycontrol live stream. You're watching Opening Bell. I'm Santosh Nair. Well, a big day for the Indian markets today. India becomes the first country to move to a T+1 settlement cycle. Now this basically means that after the day after the trade is done, the shares and the money will be in an investor's account. Now the transition to this had begun sometime in February, but from today onwards this will be applicable to all the stocks listed on both stock exchanges. And with that, let's take a quick look at the markets. The mood is quite bearish with less than 3 sessions to go for the budget, and at this point the SGX Nifty futures are indicating a steady start for Indian equities. The US markets ended firm last evening as the earnings season mostly has positive surprises. The bad news for India is that FIs continue to be net sellers. They dumped more than 2,200 crore shares worth of shares on Wednesday, which was also the expiry day, and that's at this point a major concern for the market. The Nifty rollover was about 79% for the last series, which is almost the same as the previous 2 series. Market-wide rollover was around 93%, which again is also pretty much in line with what had been seen in the previous 2 expiry series. A strong rollover trend has been seen in banking, infra and realty futures, whereas a weaker rollover has been seen in futures of power, IT and metals and FMCG. Also, index-based long-short ratio of foreign institutional investors now stand at 0.61. This basically means that FIs are net short on index futures at this point. And with that, let's move on to the newsmakers this morning. Tata Elxsi has reported a net profit of 194.7 crore. Profit is up 29% year on year. Revenues are up about 29% again at 817.7 crore. EBITDA is up 17% and margins under pressure at 30.2% versus 33.2% earlier. Now the stock has also been among the underperformers since last August. The stock has fallen quite a bit. Bikaji Food, the profit has trebled to 33.1 crore for the quarter ended December compared to the same quarter the previous year. Revenues rose by 15.7% at 508 crore rupees. The stock has seen a sharp upswing over the last few weeks. Patanjali Foods profit up by 57.7% at 369.2 crore rupees over the same period last year. Revenues have risen by 26.2% to 7,926 crore. However, operating profits are down by about 12%. Margin has come in at 4.6%, which is also down compared to 6.7% the same period last year. Blue Dart's revenues rose 6.6% to 1,337 crore, but profit was down by about 28.1%. Operating profit also down by 17%, whereas margins came in at 17.1% versus 21.8%. This is also a stock which has been underperforming of late. Well, a quick look at the markets. Indices have opened on a bearish note. The Nifty is down around 33 points in early trade. The sensex is down by about 150 points. The mid-cap index is showing a positive trend at this point, up 81 points or roughly 0.2%. Market breadth is also positive, 1254 stocks up versus 500 stocks down. Nifty Bank under severe pressure early in trade, down by about 1.1%. For the Nifty, the key level that technical analysts are looking at is 17,800. The index has bounced a few times from these levels, and falling below this level, technical analysts are expecting the downtrend to continue all the way till 17,500. Continuing with newsmakers, Chennai Petroleum reported revenues of around 16,000 crore for December quarter. This was down by close to about 20% sequentially, and net profit at 144 crore versus 232 crores. That's also seen a sharp decline. The only consolation was that EBITDA margins have improved somewhat from 2.7%, have improved to 2.7% compared with 1.1% during the same period in the preceding quarter. In brokerage bets, Kotak Institutional Equities has rated Cipla a buy with a target price of 1,255 rupees. It has said that Third quarter earnings has been steady, and while there was some softness in the South African business, it was partially offset by the strength in the US business as well as higher gross margins. Kotak expects the company's US sales to grow by 18% at a compounded rate over FY22 to FY25. It has said that domestic performance so far has been on track, and the South African business is expected to pick up from the first quarter of the next fiscal onwards. Kotak also expects Cipla's EPS to grow at 24% compounded annually between FY22 and FY25. In stock takes, Tata Motors, the company posted a net profit in the December quarter after 7 consecutive quarters of losses. The third quarter margin has seen an improvement across all segments, and according to brokerages tracking the stock, the strategy to reduce discounts in the commercial vehicle business seems to be working well. The big positive for Tata Motors at this point is that JLR performance was quite strong, and it's only likely to get better now that the chip shortage has been easing. The order book there remains pretty strong. Already the company has guided for JLR's fourth quarter volumes at 85,000, and it expects a further improvement in the year ahead. And brokerage house Jeffrey has said that it expects the overall loss for FY23 to be lower than expected, which means that the fourth quarter numbers overall should also be better than expected. Macrotech Developers is the other stock on a watch list. The company reported its third quarter numbers earlier this week, and brokerages are largely mixed. CLSA has retained its sell rating on the stock, and has said that the major challenges for this for Macrotech Developers mainly would be rising interest rates, and also the fact that the base has expanded quite a bit this year. So the base effect will come into play as far as its pre-sales go. The pre-sales overall momentum for FY23 was pretty strong, and analysts will be closely watching both the pre-sales momentum, project acquisitions as well as its debt reduction. Analysts feel that the company is on track as far as its FY23 guidance is concerned, and according to Morgan Stanley, the demand for Mumbai residential remains pretty strong. Morgan Stanley has an equal weight rating on the stock. However, CLSA feels that the company's pre-sales momentum could be strong. However, it might miss its guidance on debt reduction. CEAT is the last stock on a watch list. The top line has been flattish. However, net profits have risen for the third quarter in a row now. That's largely due to commodity prices, the price of crude oil and also rubber, that has been easing over the last couple of months now. And these factors are expected to further lift margins of CEAT. According to Nomura, the recovery in replacement demand has been fairly modest. However, the margins should continue to expand because of easing commodity prices. Also, the company has said that its capex spend will come down in FY24 to about 600 to 700 crore. It has spent around 900 crore in FY23. Well, with that, it's a wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m. In the meantime, for all news, views and analysis, stay logged on to moneycontrol.com.
1st of February, all eyes will be here. What Finance Minister Nirmala Sitharaman says on taxes, subsidies, growth, education, health, crypto, global factors and domestic recovery, every word will be crucial, every word will be analysed. But don't worry, Moneycontrol got your back. Our team will be interpreting every aspect of Budget 2023 and how it impacts your life. What's becoming more affordable? What's becoming more expensive? What are the stock recommendations and expert views? Real-time, minute-by-minute coverage. Hop onto Moneycontrol to have it all. Moneycontrol, the only digital channel to non-stop live stream budget coverage for over 12 hours. Join our experts, analysts and editors from 7:30 a.m. onwards on the 1st of February. Think budget, think Moneycontrol.